Tokyo Olympics may be a financial disaster for Japan. Despite being the world's third largest economy, Japan will feel the financial burden resulting from the Tokyo Olympics for a long time. The most important finance news today by MasterDigest. This summer's Tokyo Olympics could lead to billions of dollars in losses for Japan as costs continue to rise. Funding the stadium renovations, athlete accommodations, and event marketing has run up more than $20 billion in estimated costs for hosting the delayed 2020 Tokyo Olympics, making it one of the most expensive games in history. But it doesn't take the gold. The 2014 Winter Olympics in Sochi were the most expensive, followed by this year's Tokyo Summer Games, according to an Oxford University paper. Of course, the total cost associated with this year's games is still an estimate, per the Wall Street Journal, and a clearer picture of Japan's spending will be available in the coming weeks once the international competition wraps up. It's important to note that the expenditures for the Olympics listed here are sports-related costs. These include things such as stadium construction, ceremonies, and other operational costs like workforce and catering. Non-sports related activity by the Organizing Committee for the Olympic Games, OCOG, is not included in official spending. Despite being the world's third largest economy, Japan will feel the financial burden resulting from the Tokyo Olympics for a long time, sports finance experts say. A study has estimated that staging this year's Olympic and Paralympic Games in Tokyo without spectators would result in a 2.4 trillion yen, $23.1 billion economic loss for Japan. Matsuhiro Miyamoto, a professor of theoretical economics at Kansai University, has calculated the economic impact of holding Tokyo 2020 behind closed doors. According to his estimates, there will be an even greater loss in spending related directly to the Games. 90% of the original projection for the event. Due to declining enthusiasm for Tokyo 2020, Miyamoto estimated stimulus effects on household consumption expenditure would halve to $2.7 billion, and corporate marketing activities would be reduced. Economic gains from the promotional sporting and cultural events after the Games would be reduced by half. The American Gaming Association, AGA, has published new Olympic wagering data, finding that 20 million people plan to bet on the Tokyo Games. Since the last Olympic Games in 2018, when legal sports betting was only available in Nevada, sports betting is now legal and live in 21 states and Washington, D.C., giving more than 100 million Americans access to the legal market. While regulations on Olympic wagering will vary by state, the study confirmed that bettors plan to place wagers in a variety of ways, with casual bets with friends and online sports wagers being the most popular. It found that 47% will bet casually with friends, 43% place a wager online, 16% will place a bet at a physical sportsbook, and 13% will wager with a bookie. Of the events Americans plan to wager on, basketball and soccer are the most popular, while traditional Olympic sports will also see heavy interest. The breakdown shows that 45% will bet on basketball, 34% on soccer, 28% on gymnastics, 27% on track and field, and 27% on swimming. Traders are gearing up for a busy week of corporate earnings results from the mega-cap technology stocks this week. This will come alongside a slew of economic data reports and a monetary policy decision from the Federal Reserve. The biggest names in the S&P 500, including Apple, Microsoft, Amazon, Facebook, and Alphabet, are set to report second quarter results this week. The reports will add to what has already been an exceptional earnings season. So far, 24% of companies in the S&P 500 have reported second quarter results. And of these, 88% have topped Wall Street's earning per shares estimates, according to an analysis from FactSet. The blended earnings growth rate for the Blue Chip Index, which includes both companies' reported growth rates and the estimated rates for the companies have yet to report, stands at 74.2%. Which would be the highest since the fourth quarter of 2009. Earnings results from technology companies Snap and Twitter last week underscored the strength in the internet advertising market, suggesting a strong backdrop that likely also benefited bigger ad-driven companies like Facebook and Alphabet. The Federal Reserve kicks off its latest two-day meeting on Tuesday, with a monetary policy decision and press conference from Fed Chair Jerome Powell set to take place Wednesday afternoon. The Fed's June monetary policy statement and updated summary of economic projections were taken as much less accommodative than many market participants expected, with the central bank raising its median forecast for US economic growth and core inflation over the next 2 years. The projections suggested the Fed might be more inclined to adjust policy in light of a fast recovering economy experiencing rising inflation. The Fed's first monetary policy move would impact the central bank's quantitative easing program, with asset purchases still taking place at a rate of $120 billion per month. UK financial watchdog warns consumers over CoinBurp crypto launch. Crypto broker CoinBurp has no authorization for a planned launch of its $Burp token and initial exchange offering on Monday, July 26. Britain's Financial Conduct Authority, the FCA, said on Sunday in the latest crackdown on crypto trading. CoinBurp said last week it had raised $6 million to build a platform for buying and selling non-fungible tokens, NFTs, digital assets that are attracting interest from some investors, but also scrutiny from regulators worried about the risks. Although CoinBurp is listed on the FCA's temporary registration register, this does not allow any firm to claim to be registered or authorized by the FCA, the watchdog said. In June, the FCA said that Binance, one of the world's largest cryptocurrency exchanges, cannot conduct any regulated activity. Amazon set to accept bitcoins, develop crypto strategy. While there are big companies that do accept cryptocurrencies as payments, Amazon is not one of them, perhaps because of its unpredictable volatility. Yet the company is about to change its attitude towards cryptocurrencies and even plans to develop a special cryptocurrency and blockchain strategy. Business Insider has found an Amazon job listing that seeks a leader who will develop the retailer's digital currency and blockchain strategy, as well as a product roadmap. Indeed, Amazon has confirmed to Business Insider that it is going to accept cryptocurrencies, but did not reveal when exactly this is set to happen. Amazon used to be pretty skeptical about cryptocurrencies back in 2017 due to lack of demand, but as more people start using cryptocurrencies to keep their savings or make investments, there are obviously enough parties interested in using various digital coins for payments and avoid their conversion to real money. You can't escape the attention economy. Do not underestimate your tweets. That's your original idea and your intellectual property, and maybe you can sell it. Back in 2011, when Twitter was young, the artist and musician Leon Chang made a joke that you might remember even if you didn't see it. Slept over at a kid's house once in 3rd grade. Saw him pour milk into bowl first, then cereal. Never talked to him again. He's in jail now. Over the years, that joke has been stolen again and again, often retold with slightly different details. It still happens. Amid growing concern over the power of big tech and the unfairly distributed riches of the attention economy, the sentiment that Twitter was free started to feel only half considered. Nowadays, you have a variety of options to earn from your content, but the one most recent is out of line. A digital token of a famous GIF of a famous cat recently sold for $580,000. People who are particularly good at Twitter are experimenting with selling NFTs of their tweets. What counts as user content and is thus for sale can be defined more broadly still. Selling an NFT of a tweet isn't about fostering an audience or creating a sustainable source of income to support a creative life. It's the newest, most direct way of converting attention into money and of plucking a unit of content out of its cultural context. Thank you very much for watching. If you liked this video, please like and consider subscribing. Also, share this video with your friends if you feel so, and please put your opinion down in the comments. If you want to know more about finances, please check the links below.